European stocks rising for the first day in three after China erased almost all of the 4.7% intraday losses. Now Chinese markets are closed for a couple of days. Investors can focus on matters closer to home, Olivia, such as the ECB's monetary policy meeting tomorrow. And of course, that big Fed or the big US jobs report on Friday. The appetite for risk, Olivia, is causing investors to move out of the euro, which has taken on this new mantle of a safe haven currency, falling today against the dollar for the first day in three. Sterling is an interesting one. It's rising against the euro for the first day in three. Look at that, though. It's falling against the dollar for the seventh consecutive day, longest losing run since June. We had construction activity here in the UK today, which rose, but not as much as anticipated. Back to that ECB meeting on Thursday. What investors want, Olivia, they want some reassurance from ECB President Mario Draghi that he's willing to expand the ECB's bond purchase, if necessary, to fight deflationary forces. Have a look at the German Bund, little changed, up to... There you go, 0.8%, rose to the highest in 6 weeks yesterday. On the topic of inflation, by the way, Draghi's preferred inflationary gauge, the five-year forward inflation swap rate, has actually fallen to 1.67%. You know, Olivia, more than I know, because you used to live here, the ECB's target for inflation is just below 2%. Where's inflation? Over to you, Mr. Draghi, or should I say, Mr. Miller?
Thank you very much. If only I were in Mario's position, I think I could do a lot. Take a look at the major indexes here. We have gains after Europe's gains. We're coming off, though, the session highs. I mean, we were up almost 200 points on the Dow, and now we're up 113. The S&P 500 now only up 0.5%. We were up more than 1% earlier in the day. One of the changes that we've seen, and one of the reasons that we're seeing U.S. indexes come off the session highs, is because oil has now turned back around after we got some higher crude supply numbers than we expected. Take a look at crude here, and this is just the intraday, down 2.2%. But remember, yesterday we were down 8%. So now we have a double day back-to-back loss of 10% in crude, back down to 44.42 a barrel. As a result, you see a lot of oil stocks moving down as well, and they are the biggest losers on the S&P. Now we're looking at Ensco, we're looking at Noble, we're looking at Diamond Offshore. As far as percentage losers, these are now among the biggest losers on the index. Take a look at the VIX, though. The VIX continues to come back down, and it came down yesterday as well. So we have the biggest drop in nearly a week as far as the VIX is concerned. Well, now it looks like it's going back up 2 days. So 30.07 is a level there. Remember, we had the biggest gain in August of all time as far as monthly gains are concerned. I want to show you quickly H&R Block shares, because that's a bright spot on the S&P, one of the gaining stocks, and we now have about 350 stocks gaining, 150 stocks losing, but H&R Block is the biggest gainer in percentage terms, up 6.6% as the company announces it's going to buy back shares.